Hi guys, this is Dan from the Investment ABC, and in this video I'm going to talk about Apple and if Apple shares are buy after this brutal crash we saw during the last weeks. We could observe that the share price of Apple hit $232.07 in summer 2018 and surpassed the 1 trillion market cap. I was very bearish at that time on Apple because A, the overall market began to top, and B, whenever a stock price is reaching a psychological very important number, in 9 out of 10 times it won't surpass it the first time. Normally it takes 3 or more attempts to break that number. But if we break this psychological number, expect an intense bull run. Since the retracement from that 1 trillion market cap mark, Apple dropped almost 40% now. Many investors probably now think that Apple might be cheap at these levels. Let's find out if this is the case. If we look at the chart of Apple, we can clearly see the parabolic move we had when we hit the 1 trillion mark. If you watch some of my videos, I am always preaching not to buy into parabolic moves. Again, do not buy into parabolic moves, since all parabolic moves are crashing in a way you have to rub your eyes afterwards. When I look at this chart, we could see the price falling to around $135 before we hit some level of support. From there we have to see and decide then. The overall market is weak and I already warned about a waterfall crash since the beginning of November. I also made a video about the stock markets being still overvalued despite the recent crash. Please check it out, it provides a lot of value. In my opinion, we will see the Dow sub 20,000 very soon. The question is, how low will Apple fall when Nasdaq and Dow dives further? Let's check some of Apple's numbers to get a better understanding. Currently, the market cap is around $680 billion and the earning per share is $11.91. Apple pays $2.92 in dividends, which gives us currently a 2% yield on our potential investment. The forward PE of 10 is lower compared to some peers like Amazon or Google. Apple is sitting on $66 billion of cash, which they could easily use for acquisitions. The debt is a little bit high with $115 billion, but nothing to worry about, since this debt is covered by the long-term investments. On paper, Apple looks like a solid buy right now. Their earnings grew year over year. Now the CEO Tim Cook said in an interview that Apple is reducing their first quarter revenue guideline from $89 billion down to $84 billion. The reason, according to Cook, is the US-China trade war. If anyone thought that a trade war between the number 1 and number 2 economy in the world would not hurt the global economy, he will be surprised. Since I believe the US dollar will increase further compared to almost all other currencies, more US companies will follow Apple, lowering their revenues and earnings. We will see if Apple has to lower their earnings guidelines too, but in my opinion they have to. Since Apple is a sign for corporate America, the Chinese consumer might boycott buying Apple products even further if the trade war prolongs. China is a big market for Apple with around 18% of their 62.9 billion generated there in the fourth quarter of 2018. The question is if the decline in revenue is solely the result of the trade war or if there are also house-made problems leading to this decline. The answer is clear to me. The decline is in first place homemade, but is also intensified by the trade war. To be honest, I was scratching my head when Warren Buffett invested heavily in Apple back in 2016 and kept increasing his position to 35 billion, making it his largest position with almost 20% right now. I was wondering what made him invest in Apple and changing his strategy to not invest in tech stocks in this old age. The first thing which crossed my mind is that he must have become either senile or that it wasn't his decision in the first place. Investing that much money in Apple is a big risk because in the future there might be other companies producing just better smartphones, or we might not even use smartphones at all, but a better innovation. And exactly that doubt is now hitting Apple and Warren Buffett's Berkshire Hathaway. The smartphone technology, which is currently generating 60% of all of Apple's revenues, is more than 11 years old and in the end stage of its growth cycle. Everyone in the Western world has at least one smartphone, and it is nothing special anymore. Back in the early days, a smartphone was a symbol of status that not many people had. Now even 10-year-old kids have one. Fewer and fewer people are willing to stand many hours in lines just to get the newest phone. Normally, in these late stage cycles, the companies are cutting prices to hold market share, but Apple increased prices even more to boost revenue. Apple's market share in emerging markets is insignificant compared to the Western world because prices are just too high to sell them there. Apple has become quite arrogant in my eyes for believing that the fans will stay loyal forever. They underestimated the lemming mentality of the crowd. Once you get involved in some scandals, for example manipulating the batteries, or make one or two product mistakes, you can lose your reputations pretty quickly, especially with the younger generation now. And in the last 2 years, I felt that more and more younger smartphone users were gravitating towards Android to not be present in Apple's ecosystem. I think the forced strategy to hold the users in Apple's ecosystem is a double-edged sword, which could backfire any moment. For example, I myself don't like iTunes, but I'm forced to use it when I upload music onto my phone. Another example are the Apple speakers, with which I can't even use Spotify. I myself am still using my old iPhone 6 Plus and it still works perfectly fine. I didn't feel to spend $1,000 on a new smartphone when the old one is still working. But when I finally have to upgrade, I will not buy an iPhone, but switch to another phone maker. The main reason is the higher price compared to some of its peers, which are making also very good smartphones, and the fact that Apple removed the home button. I used my mother's iPhone 10 and was shocked when I couldn't find the home button anymore. Most iPhone users stick with iPhone because they don't like change, and removing the home button is a big change. So why not completely change to a new smartphone then? If you also check most of the independent tech channels here on YouTube, you can see that even the techies are getting angry with Apple products. So overall, Apple made some mistakes in the product development and pricing of some of the newer products. Last month, Apple announced that they were not announcing the unit sales of the iPhones anymore. That was a big red flag to me because Apple's main product is the smartphone. The services which Apple is touting are growing won't grow anymore if people are stopping to buy iPhones anymore. So as an investor, it is very important to know the unit sales. It gives confidence and shows transparency. The question remains now if Apple is a good buy at recent levels. In my eyes, it all depends on whether you think Apple can adapt to the new environment, that people think their product is not that special anymore to pay such a high premium compared to other companies. The risk is also high that if they decrease smartphone prices, they might lose even further reputation and image. On the other hand, they want to grow their services where it is beneficial to sell more devices, maybe also at lower prices. The Apple Watch also disappointed so far. To be honest, which man prefers an Apple Watch over a classic timeless watch? I don't know. I can't understand that. Apple has a lot of cash at hand to acquire some good companies like Facebook did, for example, with WhatsApp, or Google with YouTube. But it is unclear if they can find such companies and also make a good deal. The past showed that Apple's core competency is producing smartphones. Ventures into competing against Gmail and Google Drive with MobileMe and iCloud storage failed. The rumors that Apple wants to enter the electric car business is just a rumor yet, but if they do, they face tough competition with Tesla. They also plan to compete with Amazon and Netflix in the streaming industry in 2019. I also doubt the ability of Apple to surprise us with a totally new technology in the near future. The only driver in the next few years will be 5G, which will boost the revenues of all smartphone producers once again, because it will be a big performance difference between 4G and 5G, so that most people will upgrade sooner their phones again for a while. But also here Apple disappoints. They will be the last to launch the 5G phone in 2020, while Samsung and Huawei are introducing their products already in 2019. And my last critique goes to Tim Cook. In my eyes, he's very good in managing the operating business and numbers, but lacking in leadership, vision, and creativity. And the market is thinking the same thing. The risk is high, especially in this current environment, that a lot of Apple fans will dare to switch to the competition to get a 5G phone sooner. They might never come back again. So to wrap it up, I still wouldn't buy Apple at current valuations for the above mentioned reasons. I don't think Apple with Tim Cook as CEO can compete currently against Amazon, Google or Facebook, and on top of that is losing market share to Huawei, which is now the second largest smartphone producer after Samsung. At the current bad market conditions, which will get worse in 2019 in my opinion, and I come to the conclusion that all these risk factors are not priced in yet, even after the crash we saw so far. If I would be in Warren Buffett's shoes, I would currently sweat pretty heavily. I myself will buy Apple shares sometime in the end of 2019 when I think the overall market is undervalued again. If the price is right, Apple might have, due to 5G, the acquisition of a good startup or the appointing of a new CEO, some good upwards potential in the future. If you haven't watched my video about the overvaluation of the current stock markets, please do so. I think it is very hard for individual stocks to rise when the overall market keeps crashing. So for now I say goodbye. I hope you liked this video. If yes, smash the like button, subscribe and share this video to save a friend from buying Apple right now. As always, this is no financial advice. This video is for entertainment purposes only. Thanks guys, bye.